Right, so let's get back to the Business Outlook report, which was released just about 48 hours ago by the Central Bank of Nigeria for September 2019. Shows a greater confidence on macroeconomic economy with 64.7 index points. Optimism drivers for the new month starting this weekend. Services sector 36.1, that's leading. Industrial second by 20.7, wholesale and retail 6.0, and construction coming fourth 1.9 points reading, according to the survey of more than 1,000 businesses, small, large cap, medium, by the central bank, showing that they're optimistic that the exchange rate, Nigeria's naira, will firm up between now and the next 12 months. They also, however, thought that, or they expect inflation to remain a bit high at the current levels, but optimistic that overall the macroeconomy will be a little bit better in the month of September. It's usually the what you call the month-on-month business expectations, a survey conducted by the central bank. So that's the headline story we're bringing into this conversation as we look now into the final 120 days of the 365 days that make up the year 2019. Johnson Chukwu is the CEO at Carry Asset Management, is a policy analyst and a chartered stockbroker, and of course, an investment banker as well. He's wearing many caps. Good morning, Johnson. It's good to see you.
Good morning, Wilson.
Yeah, I talk about many caps. I never thought you're not going to come to the show with a caps today, but it's okay. We understand. So, this is the where we're ending the month of August. So if you look back, just give us a quick snapshot of the year so far since the general elections on the economic front. How far the road, or how smooth or bumpy do you think the roads we've traveled since the 1st of January?
Interestingly, Wilson, one would must have expected that this year will largely be dominated by political activity. If you look at our forecast for the 2019 and for 2019, my company's forecast, Cowry, we had actually predicted that we are going to deal with political activity starting from January to the end of September, and that's exactly what has happened. If you look at the first quarter of this year was the electioneering campaign and the election. Thereafter, we started a process of transition. Ministers and commissioners left their offices, and new ministers were underappointed, and commissioners in most states were appointed in the last third quarter of this year. And right now, we've not seen policy announcements by any of the key policy appointees or economic drivers of the new government. So if you look at it, one would say that this 2019 has been a slow year in terms of economic activity. Of course, that has been reflected in the growth of the GDP. We saw a GDP that grew by 2.01% in the second quarter of this year. And we are hoping that if we achieve that in the third quarter of this year, we will actually thank God for it. As it stands today, I would believe that we've not seen so much affection of economic activity. It has been largely a period of 9 to 8 months of political dominance. And I'm hoping that now the ministers have been sworn into office, we should begin to hear policy announcements in September. Actually expect that governance should actually start in September. Of course, the government is already talking of a 2020 budget. So probably what you can say is that 2019 budget was dead on arrival. It was still born because it was obviously not implemented.
Okay, so in terms of the markets, since the year started, give us a sense of if where we are today reflects your thinking, your outlook when we started the year at Carry Asset.
Yes, it does, in the sense that we expected that the market will not likely going to see a sustainable run because the political dominance in the economic space will impact on the equities market. Of course, we've seen that the first quarter of the year, we saw a market that went southwards when the election was postponed. There was actually a run on the market when the election was postponed by 1 week. Now, just to show you that the market is actually a barometer to measure the feelings or the excitement or lack of excitement of the society. If you look at the day the ministers were sworn in, you saw the market rally by more than 100 basis points. The day following that, the market also rallied by more than 100 basis points. So you observe that the market is so sensitive to what happens in the political space. The market is always looking out for signs of strong prospects or signs of weakening outlook. And like I said, the year has dominated political activities. For that reason, the market has, as we speak, as at the end of business yesterday, the market had lost more than 12% in the index.
Johnson, I'm sure you see the numbers as much as I do on a daily basis. Look at Nigerian breweries' numbers, not very sterling performance. And now we're looking at the full year ended June this year by Guinness Nigeria, reporting not very good numbers, as it were. This is Guinness reporting a net profit down nearly 20%, and earnings per share down. Revenues also down at least close to 10%, a bit north of 8%. And the company blaming the, what you call, excise duty, weak consumer demand. So if you look at it from the corporate life and businesses point of view, give us a sense of the first 9 months of the year, or 8 months of the year that we're technically ending today.
Like you rightly pointed out, some of the sectors that should actually drive the markets are actually performing weakly. If you look at the Guinness you just mentioned, but let me also tell you the one that actually of greater concern to me. Beyond the figures that you are seeing, if you look at facts behind the figures and you look at the kind of decision that is forming that is ruling the boards of particularly the multinational agency entities that are operating the country. Take, for instance, Guinness, 5.5 billion profit, dividend 3.3 billion. What does that tell you? It actually shows that they don't have confidence in the future of the economy. So they are taking out their earnings instead of reinvesting. So when you see a high dividend payout ratio, it indicates loss of confidence in the future. Because when you have strong prospect and believe the economy will expand or your opportunities will expand, you retain most of your earnings, particularly at the period where your earnings have actually declined. But if you see a high dividend payout ratio, it's symptomatic of an organization that says that let's take our money and go and invest elsewhere. And that for me is a trend of greater concern.
So when Mr. President says Nigeria has attractive investment opportunities and all of that, how should this be pursued moving forward? This is a line of rhetoric that's been heard over and over and over again, but it looks like investors are not actually opening up their portfolio for the much-needed FDI, while as we speak, and I'm sure you know that, portfolio investors are asking for premium because of the risk scenario they're looking at around Nigeria in the short to medium term.
Well, I think I'm happy you have actually hit it on the head. The investors are asking for this premium. The basic thing is that we need to reduce our environment. And that's the core of it. There is no preaching that will bring investors if your risk profile is quite high. And unfortunately for our risk profile is high. And that's why I actually said we should expect, I'm hoping that the Minister of Finance and Economic and National Planning will come up with clear fiscal policies that will redefine. We need to recalibrate our economic policy to actually look at. Currently, we do not have the appropriate policy that will drive economic growth in this economy, in this country. And if we continue in the same route, we are not likely going to achieve much plausible results. And if you go outside and go and preach to investors and say, look, the prospects are here, the truth is that Nigeria boasts a lot of prospects, but the policy environments are denying those prospects, are constraining investors from exploiting those prospects. We need to address those limiting factors. Until we take out those limiting factors, I can assure you the investors will not come. We can come and make mouths and say that we're going to attract this level of investment. Engagement with investors does not necessarily translate to final investment decision unless the investors have actually looked at the risk and they determine that the risk is such that they can manage and the returns are such that can compensate for such risk.
So you're a CEO, Johnson Chukwu. So how are you preparing for the final 120 days of 2019, September, October, November, and December? What's your outlook on the fiscal and the monetary side of things?
I believe that the fiscal authorities they have mentioned they want to come up with a budget. The budget must be approved by December. So we want to expect the medium-term expenditure framework will come out in September, and that will define the kind of growth process. And we also look at how realistic the medium-term expenditure framework, which will understand.
Okay, Johnson, very quickly. Let me cut in here quickly. Where is budget 2019 before we start discussing 2020 budget?
You know, both and I actually say that it looks like budget 2019 was pre-born. It was dead on arrival. It obviously was not touched. It was passed and signed into law, I think, June or late last week of May. And then at that point, the ministers had actually left their offices. So there was no political appointee to drive the budget. And then the ministers had just been reappointed. I mean, they were sworn in on 21st of August. At that point, the first announcement that the next budget will be prepared. So we're dealing with a budget that was obviously not implemented. And that's why I say that, look, the priorities of the government now seem to have shifted to what will be their economic plan for 2020 going forward. For now, I do not see, I will be waiting to hear the level of implementation of the budget, other than the recorded expenditure that incurred as a result of the evolution of time. But the capital expenditure, I want to believe that was largely unimplemented.
So advise me, how should I position for the final trade? How should I trace the final months of 2019?
The one word I would say is that you have to trade cautiously. You have to be in the defensive mode. Granted that the last quarter of the year in Nigeria is always an exuberant quarter. We normally see a lot of higher economic activity. Unfortunately, the level of consumer disposable income has weakened. So you may not see as much excitement associated with the Yuletide as you normally see in the previous years, because incomes have been eroded, higher level of employment, and we've not seen growth in the several sectors of the economy that could create excitement associated with year-end.
Yeah, but Johnson, you and I know that when it comes to public holidays and holidays such as the Yuletide and what have you, Nigerians always find the money for rice and chicken. If you look at the last one, which was, I guess, at the Cabaret, also just a few weeks ago, and we just had this ram market around us here at Channel's global headquarters, not directly in front of us, but just a little bit way down. And you can see the whole highway, everyone was parking, buying rams. And we just said, hold on a second. We thought there was no money. But folks were buying rams day and night. It's a big market. So Nigerians will always find money to celebrate holidays. Whatever happens, we just want to be happy whatever the problems we face, economically speaking, isn't it?
No, but what you have to recognize, you have to compare one period to the other, which is basically that you must not take figures based on a static position or a seasonal position. You have to look at what number of rams we have sold 2 years ago and 3 years ago, and what quantity was sold in this current year. You have to look at what size of bags rice people buy in the previous 3 years. Is it declining or increasing? I'm sure that volume is declining.
I understand, because with the closure of the borders, we hear rice is around 20,000 naira per bag as we speak. That's almost the new minimum wage. The new minimum wage is 30,000. It hasn't been paid, and the bag of rice is already 20,000. Perhaps by the time the new minimum wage comes out, rice will be 30,000. Sorry, I take that back. That's not wishing everybody bad, but that's just the reality of the day. Thank you. Enjoy your weekend. Johnson Chukwu, the CEO at Carry Asset Management. Thank you very much for wrapping up the month of August for us. We'll see you again in September.
My pleasure.
Great. So, when we talk about Brexit and the entire political quagmire that the UK faces at the moment, oftentimes we talk about folk sorrow in the UK, but there are millions of UK nationals who reside in the EU outside the UK at the moment. So if you think about the impact of Brexit on those who are in the UK as we speak, we'll talk about the geographical area. What about those who are living outside? How is the authorities in the United Kingdom prepping for those EU nationals outside the shores of the UK and who would be considering what the Brexit will mean for them from October the 31st, deal or no deal? That's the question I'm putting first to Juliana Olayinka, my colleague from our London studios. Juliana, you're living in the UK, geographically speaking, but if you're a UK national outside the UK right now, anywhere in the EU, in Germany, France, elsewhere, what would be your thoughts? Do you think the government is making any arrangement for you to have a soft landing from October the 31st?
Well, it's definitely a high anxiety, I must say. But all along, both prime ministers that have been dealing with this EU wrestle, Theresa May and Boris Johnson, they have both stressed that EU citizens' rights living in the UK will be protected whether or not there is a deal. But the same can't be said for the EU, and that's purely because that's not a collective decision. That's a decision up to each and individual state. We have about 1.3 million British-born citizens living in the EU, mainly in Ireland, Germany, France, and in Spain. And in Theresa May's old withdrawal deal, that deal that was rejected 3 times by Parliament, it did say that these nationals would be protected under some sort of collective bloc up until the end of 2020. But of course, at the moment, that deal isn't in place, and Boris Johnson may be seeing us crash out. Now, the EU Commission spokesperson, the head there, Juncker, has said to the EU 27 that if indeed Boris Johnson does play fair and does stick to the plan of looking after EU citizens living in the UK, then the same should take place for them. And we do know that Germany, whether or not there will be a deal, will allow British citizens living in the EU to be looked after until the end of 2020. And that's really when, after October the 31st, the Brexit transition will end. So far, it seems as if people will play along with that. And up until the end of next year, things will stay the same. When it comes to travel, things are a little bit different because, of course, one of the main reasons why we had that 2016 referendum was because there were certain places, certain people within the United Kingdom that weren't happy about the free movement of people. The free movement of people, from what Nigel Farage was saying, was taking up most of the jobs in Britain. So Boris Johnson has declared that the free movement of people will be taken out of any sort of relationship they have with the EU, which means students and people who are working on the continent won't be able to move freely. And of course, health, pensions, insurance, that will be affected. And unless something, a significant deal is negotiated before October the 31st, British citizens living in Europe will be treated like a third country, so like those in America and like those in China.
Juliana, this is looking a very messy divorce, as it were. Of course, this is a political decision with a lot of economic and social undertones, and the citizens of both the EU and the UK are the ones who are going to get threshed upon by these big elephants fighting. And that's what is beginning to look like from your analysis and insight into what is going on there. Okay, let's leave it there. The other side of this conversation, Juliana, which we'll be having later today at 1:30 in the afternoon with Chimezie Obiwagu on our Business Incorporated, has to do with the market for the week. So put that all together, and I wish you folks the best after lunchtime. I'll be watching you guys from the master control. Thank you so much, Juliana Olayinka.
Thank you.
We appreciate that from our London studios, my colleague down there. Well, let's check in with our marketplace as we start the first hours of the final trading day of the month. That's August the 30th. Okay, so let's get our opening calls for today. The final trading day for the month of August and for the current week. Ajibola Aero Phillips is the head of FX trading at FBN Quest Merchant Bank, and he's live to us from FMDQ Exchange Place. Ajibola, it's good to wrap up this week and the month with you. So, how interesting or exciting or otherwise has it been the road to today, the final trading day? Let's start with the FX side. I'm interested in the currency, which seemed to be the underbelly of every other thing we're talking about.
Market has been interesting this week. Liquidity has slightly improved. like we've mentioned in the past, there's been a bit of liquidity squeeze in the FX market, but things are beginning to slightly improve. We've seen some inflows. It's hard to tell where exactly the inflows are coming from, apart from CBN, but at least we've seen some inflows in the market, and the rates have traded, slightly down. Before, high market was trading at above 363. Now it's slightly below that for interbank trades, and that's just because there's been a bit of liquidity that's come in the market. I think total volume traded as at yesterday, Thursday, was about $900 million, which is pretty, pretty much average that we've seen before we saw, all of the tightness in the FX market that we've seen in recent times. So market is really, really well for the FX market in itself. It's been a bit, there's been some flows in the market, and that's encouraging, at least for the FX traders.
Mm. Okay, as far as the exchange rate is concerned, what's the outlook here? Quick one.
Well, we have some relative stability, but I mean, some of the news that we've been seeing in the market is what's been going up with Egypt, which has been competing for some of the FPI inflows that we've seen in the FX market. There's been a rate cut there after all of the reforms that they went through. So we need to keep an eye on that market and see if the rate cut is going to lead to some flows coming down our way, although they still remain one of the biggest market for carry trade. So I expect that there'll be some relative stability. Again, because yields have started to inch up slightly, that might be encouraging signs for some of these FPI flows that have been the mainstay of the INE market to come back into the market again.
Yeah, is the INE, how stable is the INE window as we speak?
Pretty stable. Total volume traded yesterday was $300 million, and that's encouraging, from some of the things that we've seen in recent times. So pretty stable right now.
What's your outlook for September on the FX side?
I expect that we'll still be around this level. I don't expect that would, I think we've gone past a little bit above the hunch that we're seeing. I expect that we'll still some flows come down where that will keep the market relatively stable. Again, you've seen some of the moves that the central bank has made, and then they've been intervening in the market as well. So I expect that we'll be around this level, 364, 363 levels for the FX market.
Mm. So let's look at the yield curve.
Yeah, fixed income has been interesting, especially on the Treasury bills end. At the beginning of the week, there was a bit of a buy that's coming from liquidity that's been in the market, but then that has reversed because of the increase in yields at the PMA and at the OMO option. So we've seen that people are trying to replace sell-off by replacing with the new issues. Expect that yields will continue to itch slightly, although CBN will not like to hear that because that's against some of the things that they've been trying to do in recent times. But again, it's they're torn between increasing yields and trying to attract FX flows or reducing yields, and then we get some pressure on the naira. So CBN has to find a very good balance for both.
Yes, a very difficult balancing work there for the regulator. But again, if you take a look at September and what is on the calendar of issuances by the debt office and all of that, what's your outlook on the yield curve here, at least sticking with the treasuries for now?
A slight uptick in rates. 1 year, I mean, it's still at the last PMA was about 13.89. I expect that it will go up slightly. But again, like I said, I think we need to keep an eye on what's going on globally. It's not going to encourage the CBN to relax back and cut back rate. So we need to be on the watch out for that as well.
Mm. Okay, well, we appreciate that so much. Ajibola Aero-Phillips, thank you so much. Enjoy the rest of the day. Enjoy the weekend, and we'll see each other again in September.
Thank you, Boss.
Thank you so much. Ajibola Aero-Phillips, head of FX trading at FBN Quest Merchant Bank. So that's the story out there as far as the debt market and the FX is concerned. I'm trying to check through the stock exchange and see that the index is looking green in early trade today. But of course, we're going to finish the month around 27,000 on the composite index. After we saw a very massive rally last week, a little bit above 3% on the general index, this week is looking exactly the opposite, although not as brutal as we thought it would be, but it's been a bit choppy. Yesterday, 0.66% on the downside. Quite a few earnings are coming through. These are part of what will take you into the new month of September. Of course, between next month and October, Guinness Nigeria will be paying a dividend that we disclosed to you earlier, a dividend that will be coming through 152 kobo per share for its full year ended June 2019. The numbers generally were in the water. Earnings per share were down to 250 kobo on the EPS. That's down about 24.2%. That will be paid in the coming month, in the Q4. Then you find Fidelity Bank reporting first half 2019 numbers, earnings per share up to 47 kobo, headline revenue 103.6 billion naira. That's a triple digit for the first time, half-year numbers for these tier 2 lenders. Already you have Stanbic paying 1 naira per share interim dividend within the period we're starting also into September. PZ Cussons also reported a 15 kobo per share for its year ended May the 30th, 2019. The shareholders meeting would also be within the next 60 days as we try to report the markets and the companies there for you. So keep this at the back of your mind. Let's get, however, a sense of today's first trading day with Edidiong. Let's check in with her to wrap up the show for today, live from the trading floor at the Nigerian Stock Exchange. Edidiong, let's wrap this up together with a nice and warm handshake, which the stock market looks like is looking green now. I want to hold that to my chest as we wrap up the show.
Oh yes, Bosin, the market is currently up by 0.19%. I'm also keeping my fingers crossed that we end the week positive. But you know, we've seen about 7.33 million shares valued at 443 million naira. Now, Bosin, insurance is down, oil and gas is unchanged, banking is up 0.08%. Consumer goods and industrial goods are unchanged, so I'm sure you and I know that right now MTN is actually pushing the market. That stock is currently up 0.86%, trading at 140 naira and 5 kobo. So hopefully we've seen about 3.05 million shares traded so far from MTN. Next on the top trades is Champs PLC and Continental Insurance. But Continental Insurance is actually what is dragging the insurance sector right now. It's down by 7.64%. So let's keep our fingers crossed and hope for a better trading week today, or better trading day today. But speaking about earnings, Bose, you know, Fidelity Bank released good earnings yesterday, and although they're not proposing any dividend, but that counter closed up by 3.11% yesterday. Now Guinness, which is proposing dividend, you know, it was unchanged yesterday. PZ as well was unchanged yesterday. Their earnings weren't so great. Profit after tax was down. Profit before tax was down. Revenue was lower. You know, operating profit was also lower. But then, you know, they'll be holding their AGM on the 29th of October at Bristol Palace Hotel in Kano by 11 a.m. So, you know, hopefully we'll keep an eye out to see how the rest of the day goes, Bosin.
Yes, thank you so much, Edidiong Ewang from the NSE trading floor. Have a great day. And, of course, you share it in the afternoon, lunchtime business, incorporated with Chimezobi Wagu. I'll see you then.
Thank you.
So, I've got a final advice for everyone. If you have no real serious business in Lagos and you have to come to the city by road via the Lagos-Ibadan highway from Monday, September the 2nd, my advice is that you stay away from here. At least see how things go from Monday, and the vehicle is snarl that we expect. It's going to impact our operations here, but we've got everything wrapped up for you to keep business, markets, and general news moving. We are the one hosting the repair right in front of us, and we're live covering all of that for you starting from this weekend. Channels Television, Nigeria's news leader, where news comes first, followed by business, hand in hand. I'll see you again very soon. Have a great day, everyone.